In this module, we are going to discuss how to use the Practice Engagement Guide, or PEG, for compilations. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, in terms of documentation, here's the list of what's required, A to H, and we remember we're not supposed to be doing any work, and we're not supposed to be giving any assurance. So as we comply with all of these, we want to make it all sound as if we're giving no assurance ever. And the first test is the documentation has to be sufficient in the practitioner's judgment. And my inclination in this, therefore, is to keep the documentation requirement small and assume that my partners will expand as necessary if you get to a great, big, huge, size of a public company compilation, which I don't imagine you will. But sufficient in the practitioner's judgment, and if someone says, I don't think you had enough documentation, you say, well, in my judgment it was, and therefore I've met the section. Now there's a second part to that too, sufficient for an experienced practitioner to understand. So you have to say, well, in my judgment it was enough, and in my judgment an experienced practitioner should have understood. Now the things that are required is have an engagement letter and get one. You absolutely have to have an engagement letter. B is business operations, accounting system, records, and basis of accounting. Now we're going to talk more about the basis of accounting, but the basis of accounting has to be in the financial information, and therefore I would also put it in the engagement letter, and indeed I'd have a rep letter and put it in there too to make sure management hasn't changed their mind. And business operations, I would think if I have a blank box and I would say this business is a restaurant or a retail store, that would be enough. You have to have a reconciliation of the records to the financial information. I can't imagine how in a compilation you wouldn't have that, because the client gives you basic accounting records and you turn them by a series of journal entries into financial information. One would assume that's in the file, but not a bad idea to have a checklist step to remind you, yeah, we've got that. Significant judgments, if any, and hopefully there are none. We'll talk more about this in a bit, but to the extent that I, as the accountant, am making significant judgments, I'm giving some level of assurance that the judgment I made is correct, and I don't want to do that. So maybe I help management make significant judgments, say, well, here's how you might make the judgment, but I'm not making it for you, and it would be very clear. But hopefully when I come to that checklist question, I will say not applicable. And communication and misleading matters, if any. And again, hopefully none. Again, if this starts to get like we're starting to have a fight with a client about misleading matters, I'm going right down to H and withdrawing. Now, if it's something like they sent us our stuff and forgot to send allowance for doubtful accounts, I don't think that's communication of a misleading matter, because presumably the client goes, sorry, forgot, I'll email it to you right away. So again, hopefully there are none. But to the extent that we're communicating misleading matters, we've at least done enough work to determine that they're misleading, probably implying that we know what the right answer is. So we've done some work and we're giving some assurance, and we've done too much. Copy of the financial instruments and a statement of management's responsibility. Again, I prefer to document that, A, in the engagement letter at the beginning, saying we intend to take full responsibility, and B, at the end in the representation letter, which I think is mandatory. You don't have to, it doesn't say you have to, but to document these things with management's signature on it and to document that they've taken responsibility. I think you have to have that in a representation letter at the end. So engagement letter at the beginning, representation letter at the end. Copy of the report and reasons for withdrawal. And my simple reason for withdrawal, to give the client nothing to tell their lawyer about, would be We no longer wish to provide you with services. We are withdrawing. Goodbye. Now, we must do the things that are required. If it says you got to do it, you got to do it. If it says you shall document, you shall document. But there are other things, and this applies to audits, reviews, and compilations, where the standard setters say you may do this. Well, may means the same as may not. So may do means may not do. It's your choice. Now, it's useful guidance if there are issues, but you don't have to do them all, and you certainly, I don't want to put all of these may do items in a checklist, though I occasionally do if they're helpful. But all I intend to do and document is the things I have to do and document. And the other stuff I can say, well, I didn't have to document that, and in my judgment, I didn't need to, and I would assume an experienced professional would understand that. Now, the other thing to remember is the work requirement for compilations is unchanged. We are doing no work for the purpose of giving assurance, and we are giving no assurance, though the new report sure looks like we're giving lots and lots of assurance until you get to the very last sentence when it suddenly says, well, that all stuff sounded great, but we're not giving any assurance. All of the new requirements are about documentation, more and more documentation, but none of the documentation is about doing work for the purpose of giving assurance. We're just documenting. So given that we got to document a lot of stuff, I would like to focus on the representation and the engagement letter, and as much of the possible documentation as I can toss into the representation and engagement letter, that's what I would intend to do. Now, further remember, and I said this before, but I can't emphasize it enough, we are doing no work to give assurance. So this means we have to be very careful in the wording we use throughout the checklist so that it's very clear that we're not giving any assurance. We haven't done any work. So we don't want to have a conclusion based on the work I've done. I think this. It implies you've done work and you weren't supposed to have, and someone could jump on that. Now, the other thing is, and I mentioned this a bit, but care with significant judgments, to emphasize this. I would prefer not to. I never want the file to indicate that I was taking responsibility for a judgment or giving assurance about a judgment. And that's going to be difficult to do, so I would prefer that this would all be not applicable. But I guess occasionally management might phone you up and say, we have no idea how to do inventory obsolescence. Can you help us and give us some general guidance? And you can say, well, okay, this is general guidance, but you have to make the call. I'm not deciding it for you. So here's how I would do it, how I would structure it. You make the call and send me a number. Now, similarly, care with misleading matters. And the very phrase, if we believe something is misleading, that means we have some basis for determining what is wrong and therefore what's required to make it right. So, and that implies we've done some work and we've given some assurance as to what is wrong and what is right. So I would prefer not to do this unless it's spectacularly wrong, and then I guess we have to do something about it. And in the old section even, I mean, if you found something wrong, it was so obvious that it just fell in your lap that it was wrong, you had to then proceed to do some work and provide or determine what was right. And so you are, and then, in fact, giving a little bit of assurance in that, but understanding that, you make sure that you do enough work and charge the client for it. Now, as I said before, if clients forgot to send you the allowance for doubtful accounts and you send them an email saying, hey, you forgot it, please provide it, and they go, oh, sorry about that, here it is. I don't think that's a misleading matter. That's just an oopsie on the client's part. Normally in these engagements, the client wants us to fix. They want us to remind them to have allowance for doubtful accounts, have inventory obsolescence, put depreciation against their fixed assets. They want that. So even if we had prompted for AFTA, I would prefer to say there were no misleading matters. It was not applicable. And as I said before, this gets to be a big problem, that we're now getting into a fight with the client because it's clear the information is wrong and they don't want to fix it. I don't want to be involved. Quit. Gone. So we have to be, again, with this, particularly misleading matters, very careful with our wording. Now, PEG provides 6 pages of checklists, a 1-page withdrawal checklist, a 3-page engagement letter, and a 1-page rep letter. So how do we use this? C110 is an engagement acceptance and continuance checklist. Do have to write something down about that. I would observe it's a bit too long. So for instance, we have an objective at the beginning which basically says we intend to comply with section 4200. I would delete that objective. We're going to say that we think we've done that at the end. And we have to make inquiries of management. Again, I dislike big boxes where staff are going to be inspired to take a lot of time to fill in a lot of empty blanks. They're going to fill in every single blank. So I would just delete that. If there are inquiries of management, the person who signed the rep letter, that documents, or the engagement letter, that documents who we inquired of. Intended third-party use, either delete this question because it's in the rep letter and in the engagement letter anyway, or change this question to is intended or third-party use documented in the engagement and rep letter, just to remind us to make sure that we've done them. Expected basis of accounting, and I'm going to talk about what that might be in a minute. But again, it has to be there. It has to be in the financial information. Rather than documenting what it is here, I would like to document that in the rep letter, in the engagement letter, in the financial information. And I would write this question, is the expected basis of accounting selected by management in those 3 places? Question 3 asks about third-party use again, so that duplicates. I think we can take that out. Independence, that's a good question. This is at the acceptance or continuance basis, the beginning of the engagement, not the end. We'll know more at the end. I think this is too long. I would just shorten it up and say something to the effect of, are there any independence threats and have we dealt with them? And presumably there are none. We will, at the end of the engagement, determine whether any independence threats need to be put in the report. I don't want to talk about it here. Keep my life simple. Considerations if there's no new engagement letter. Now, in all 3 standards now, the rule is, in audits, reviews, and compilations, you have to get an engagement letter, and this is for your own protection, but you have to get an engagement letter before the first engagement begins. And thereafter, if it's just too complicated to get a new letter every year, it takes 5 minutes, and that may be, just too complicated for you. There are several things, and it's roughly the same list. It changes a bit between audit and review and compilation, but there is a list of things like indication that management misunderstands the objectives and scope. Well, I don't want to spend any time on that because I want to just assume they've signed the rep letter, so I don't want to do that. Any revised or special terms of the engagement. Recent change in management. When I look at this list of things, it would take me a long time. It might take me a full day to properly answer these questions, and I might have to have done some work that could be determined to be providing assurance. So I've spent an awful long time to avoid 5 minutes getting a new letter. So my preference, actually, in all 3 engagements is just get a new letter every year. The new letter you get can be at the end of this year's engagement, and I will put it in this year's file. And if someone says you don't have an engagement letter for next year, I will say, well, I got it in last year's file, and if you really, really want to be picky, I can yank it out of last year's file or take a photocopy of it from last year's file and put it in this year's file. But if I get an engagement letter at the beginning, before the first engagement, and then every year thereafter, I don't have to answer this question. And other procedures, well, we're not supposed to be doing procedures, so I would take that out just in case someone writes something in there and spends time. And the conclusion, I think the conclusion is that we can accept the engagement. And there are 2 conclusions. And I think we just want to take them out. And indeed, you might argue that we can document that we can accept the engagement by the fact that we got an engagement letter and accepted it. So I think we can revise this, shorten it down to maybe even half a page, and do less work. Now, as I said, the conclusion is that we can accept the engagement, and I think we can just take that out. It's unnecessary. If you can't figure out that I accepted the engagement by looking at a signed engagement letter, I don't think you're an experienced practitioner. And the second part of the conclusion, that any impairment in independence is disclosed in the report. Well, acceptance at the beginning and report at the end, so it's in the wrong place. And I would prefer only one conclusion at the end, so I think I would just delete this conclusion, and I will have a conclusion at the end of the engagement that nothing's come to my attention, that we're not in accordance with 4200. Now, C210 is 2 pages. It's about knowledge of the entity. And again, we've got objectives and inquiry of management. I would take that out. It's just going to take time to fill out. General information. Is it a private company? Is it a public company? What is it? I just don't think that's required. I think we're going to know all that stuff and have it documented some other place. So I just don't think that's necessary. Jurisdiction of incorporation, why do we care? Governance and key management, why do we care? They signed the rep letter, it's documented there. Key advisors, key users of the financial information. Well, I'm going to have that. I'm going to have asked management that question because I have to, and I have to have it in the engagement letter. So key users are going to be documented in the engagement letter. And I dislike documenting things in 2 places just in case they differ. So I want to have it only documented in one place, the engagement letter and maybe the rep letter. And I don't need a second general information section. Business operations, there are 6 questions. Some can't be answered till the engagement is over, like significant changes from prior period. I can't figure that out at the beginning. I have to wait till the end. So I want to take that out. The other thing is blank box, business operations. It's a restaurant. Is there anything else I need to say? Anything else that's in this section here will be evident from the financial information when it's done, and I will have looked at it. So in order for me to understand the business and operations, I think an experienced practitioner would understand what was going on if I told him it was a restaurant. And I don't want to have questions that I have to answer after I've done it in this section, which I think presumably you have to fill out before you've done it. The accounting systems, whole bunch of questions, 11 questions in various bits. That has to be in the engagement letter, that we're using the tax basis, for instance, that we're using such and such accounting software, and we have a list of inventory obsolescence and a list of allowance of accounts and a list of accounts payable. That'll be evident from elsewhere in the file. So a brief documentation of that in a blank box will probably be enough. Basis of accounting, that duplicates C110-2. That has to be in the engagement letter, so we're doing it. And prepared by and areas of complexity, I think that's too much. If there are areas of complexity, presumably partners and staff are smart enough to figure that out. So the test is in the practitioner judgment, and I think we can skinny this page, this form down so it's shorter and can be filled out more quickly. Now, the basis of accounting must be in the financial statements. And apparently it's been a year and people haven't figured out that they're supposed to do that yet. Now, we do not want to imply any assurance that we've checked that this is actually the basis of accounting being used, though I guess it's a little hard. If we've been told it's the tax basis, presumably we'll know that because we'll see that things are being done in accordance with the tax return. But it must be disclosed in the financial statements. Management has to tell us. It's management's basis of accounting, not ours, though I suppose we're going to have to give people a little hint. I would prefer, as I've said, that it be repeated in the engagement and the rep letter, and then I don't have to document it elsewhere. So that's what I would like to do. Now, some people have said in their statements, well, we're using accounting standards for private enterprises. Well, if that's what you're doing, then you have to have a statement of changes in financial position and full and complete notes. And it's a lot of work just to do that. And if a reasonable third party sees that you have prepared a complete set of financial statements with a complete set of accounting standards for private entity notes, they're going to assume that you've done something to make sure that. And I guess in order for you to make sure that all the notes are there as required, well, now you'd have to start to do some work to figure out what notes are required. So you'd have to do a lot of work, and a third party, I would think, by the time you'd done that, I would think a third party can say, well, I assumed you checked that this is right. You said it was in accordance with ASPE. I'm assuming it was right. That happens. People have been able to find ways under the old standard where it was pretty clear we weren't given assurance, and here it's less clear, to hold an accountant responsible if there was an error in notice to reader financial statements. So legal exposure and lots of work. I don't think I want to say I've used ASPE. Very difficult. Now, what then? And my preference, I think, would be to have the note, the one and only note in the financial statement, saying, title, basis of accounting selected by management. So it's very clear I didn't do it. They did it. And then I would say management has selected the tax basis of accounting for the compiled financial information. Or you could say they have selected the cash basis of accounting with certain accruals provided by management for the compiled financial information. Now, the reason I like the first one, tax basis, is A, that's typically what a compilation is for. They do it for the purpose of doing a tax return. And therefore, they really don't want us to be using some kind of GAAP depreciation. Just use the same tax basis depreciation rates that are in the tax return. We can make that clear by saying on the income statement, and maybe we don't even want to call it an income statement because then that implies that it is an income statement, the financial information about income or something, but tax basis depreciation. And the tax basis would assume that payables were accrued and would assume that inventory was written down if it was obsolete. All of those things would be implicit in the tax basis. Second one comes close, but the second one I think implies that we've done a little bit more than the first one. And if we have done the tax return, and if everything in the financial information is the same as the tax return, we've done enough, I think, to say, well, we were reasonably sure that the tax basis was in fact being used. So, as I say, the tax basis implies certain things done in accordance with tax rates. Don't need dimensional accruals, and it's pretty clear we've done nothing. Now the completion checklist, C310, which is 2 pages. And I want to be particularly careful with wording here to not imply assurance. So the first thing I would do is just delete the objective. It's not needed. Some other questions can be revised. Obtain knowledge of the entity. Fill out the form. I guess that's okay. And engagement, acceptance, and continuance. Make sure we filled out that form. Fine. Or you could even embody those questions in this form and have only one form. But question 5, significant judgments made. I'm careful with that one. It sounds like we're making the judgments and giving assurance. I would reword it to something like, the file documents our discussions with management about significant judgments they made, and again, I'm going to hope it's not applicable. Question 6 is a conclusion, and I would change that to a compilation conclusion and put it at the end. That I've read the financial statement and it does financial information, and it does not appear to be misleading. Question 7 about matters identified. Again, I would just add something there. Matters identified and how they were addressed by management, and I would continue to hope that it's not applicable, that there weren't any matters. The conclusion says, based on the results of the work performed, Well, we didn't perform any work, and I don't want to imply that we did, so I would just take that out. The requirements of 4200 have been met. I think I would just replace all of that with the conclusion that I've now derived from question 6 and take that out. Certainly take out based on the results of the work performed, because it sounds now like we were doing some stuff to make sure that it met the section. Question 9, my inclination is to take that out and just have it documented in the representation letter. Now the engagement letter. In the engagement letter, management is to advise us about third-party use, either that there is none, or that there is someone and what they're going to be using the financial information for. And I really am reluctant to accept an engagement where there is significant third-party use, assuming that they're just going to get it without me talking to them. And they're going to get it when they read the new compilation report, which sounds absolutely like an audit report. We're saying we've done this and we've done that and we've done the other. If you look at it carefully, we really haven't done anything. But we say we've done a lot of stuff. So if there's a significant party that's intending to make important use of the financial information, I'm reluctant to do this. So if we do decide to do it, it's imperative that the third-party use be in the engagement letter. Now the problem and what's missing from the engagement letter in PEG is at the time the engagement letter is signed, there may be no intended third-party use. We're getting the engagement letter signed at the beginning, or maybe at the end of last year's engagement. So a lot of some time could have passed and a third party could have arisen. And management has to promise us, in order for us to accept the engagement, that they will give the third party any information they need. All the information they want will be provided to the third party by management. I don't get this, worries me that in the end the third party is going to sue us, but never mind. At very least, make sure you have this in the engagement letter. But what I particularly worry about is this appearance of a third party, either after we've completed the engagement or between the time when the engagement letter is signed and the engagement is completed. So I would want management to agree in the engagement letter that first they will advise us if a new third party appears, and second, if a new third party appears, they promise that they will give the third parties all the information they need. So I would add that and duplicate it. We have to say who the third parties are and promise that we'll give them the information, and just reword that to say if there's any new third parties, we'll tell you and we'll give them all the information necessary. So I think that's important to add to the engagement letter. Now, I didn't quite describe all of what 4241C required, a reconciliation of the entity's accounting records to the financial information, but also adjusting journal entries or other amendments the practitioner has agreed with management. So that's the second part of 41C. Have to have the reconciliation. So question, do we have a reconciliation? Question 8 kind of implicitly mentions this, the agreement with management, but I think it needs to be really clear. I think it needs to be clear that management has agreed to our adjustments, taken responsibility for them, approved and taken responsibility for the financial information. It's theirs. I think that should be clear, and I think it should be in the representation letter that we get at the end of the engagement. We, management, have approved all the adjustments you have made, approved all the adjusting journal entries you have made. We've approved and taken responsibility for the financial information. It's not there. I think it should be to keep us safe. The representation letter. Now, the representation letter is in PEG is pretty slim. Now, the entity is less complicated, And the engagement letter's at the beginning and the rep letter's at the end, but it doesn't say we have to have one, but there's a whole bunch of things we have to get management to agree to. I think it's useful to emphasize all those things, and I think it's very useful to get a rep letter at the end to emphasize all of that. So I would add, again, it's got to be in the engagement letter, but I would again get management to say, we understand that we're responsible for fraud and error, you're not. Acknowledge again that we're not giving any assurance. Acknowledge again the use and third parties, again, what our intended use is and any third parties. Advise of any new third parties, and promise again to advise us if any come up after they've signed a letter. Acknowledge the accounting basis again. Approve the journal entries, and repeat any significant judgments that they have made. I just think all of those things, we're not doing any work. This is management. It needs to be clear. It needs to be documented, not particularly for the purpose of standards, but for the purpose of keeping us safe, keeping us from getting sued because we forgot to document this stuff. So this is really important, I think, we add to the rep letter. So, as I said, PEG provides 6 pages of checklist. I think you could drop all of that down to 1 or 2 and incorporate it into a single checklist. There's a 1-page withdrawal checklist. I think you can reduce that to in the single checklist a question: have we decided that we need to withdraw and can no longer provide services, and if so, advise the client? I think I would get rid of that form and incorporate it into the one above. 3-page engagement letter, I would, as I said, add the new third-party stuff. And the 1-page rep letter, we've just gone over the additions. I think there are some important additions and repetitions, and I don't care. It's not hard to do. Particularly approving the journal entries, which is not there now. So, thanks for listening.